Hello.
Yes, Smith.
Yeah. So sorry, sir, for the technical glitch. So now going forward with the discussion. So my first question to you regarding the budget is, sir, as you already know that government had announced that they will be reaching 5 trillion economy by 2026. So is this budget in line to achieve that target? Going forward with the
Yes, Smith. Two part to it. 5 is a kind of inspirational aim, and surely as a country we are moving in that direction. We are going to achieve those aspirational aim, you can call it. There are two parts when somebody say $5 trillion economy. So first of all, you talk in dollar terms, right? So whether something will be $5 trillion or 5.5 and 4.5 will also depend upon what the dollar rupee value is in 2026, right? Let us assume today's rate, say 80, 81. Now, if you take dollar to dollar rupee to remain, say 80, 81, that means you are talking about 400 lakh crore of economic size in rupee terms in India, right? We are closing FY23 now, 2 days. So this achievement will require, or this aspiration will require us that every year, financial year 2024, 25 and 26, if we do 10% each every year, we will surely reach there, right? And this 10% is nominal GDP growth, right? That means say 3 to 4% of inflation and 5.5 to 6.5%, or say 6 to 7% of real GDP growth, which does not look a very high task, doesn't look a very difficult kind of a task. So if you ask me, my own opinion is by FY26, we should be reaching $5 trillion. But yes, some bit of few months here and there can happen, because in between dollar rupee will also move. So what will mean in dollar terms 5 trillion in 2026? That may change some particular time here and there, smaller time, but largely as a construct, we are set for those kind of achievement by that time.
Right. Absolutely right, sir. So adding to this, like the government also in this context only has increased the capital expenditure sharply by 33.33%, which is from 7.5 lakh crores to 10 lakh crores. So again, is this the right decision, and will this help Nifty touch 20,000 by this December?
Yeah, very relevant one. See, there are a couple of things we have to see in this context, right? Say 2016, the capital expenditure in India was around 2.5 lakh crore. So what this 10 lakh crore tells you is a 4-fold jump in 6 years, which is a very high, right? Which is a very high number. Last year, it was 7.3. So again, a very high year-on-year growth has happened in capital expenditure, and very positive, I would say. Very important part to look at it, for economy to remain growing faster, you require certain segment of your economy to do good, right? We are living in a very challenging global economic situation. That means global growth rub-off effect will not happen. So you will not get any support from global economies, right? So your trade will not grow big time. Also, because of the COVID and the effect thereafter, the spending in India has not recovered fully. It has not yet gone, it has gone back closer to pre-COVID, but has not shown a significant jump, I would say. So trade will not grow because of globally things are not happening. Your spending or the consumption is not doing great, right? It's not double-digit kind of a growth, right? जो private capex है, जो private investments होता है, they are also lagging because of a global bad situation. India consumption not moving. Even the kind of capex private sector has to do in economy right now is not that high, is not up to level of what we desire, right? In a situation like this, so if you look the capital expenditure by government in this context, it was right measure, I think only available measure for the government, that they front load every other problems, right? So like there's a trade problem, there's a consumption problem, private capex issue. In a situation like that, to make the economy remain growing 6.5%, right? Government has to front load. And how they can front load is by doing a lot of capex by their own self. So when you look at the last 1 year and you say world में हर एक country में problem आई है, but India was standing tall, right? Because of these initiatives only. So what the government has done and has done in a very right manner, because they are seeing those challenges, right? Because nothing is going to help you to grow at 6.5% so easily. So you require to front end and do lot of capex that the government can do. So it's in a very right direction. The third part that you asked about the market levels, you know, if you look at the market right now, the Nifty earning per share. So Nifty earning per share for the current financial year FY23 is closer to, I think, 820, right? And for financial year 2024, which is the next financial year, it will be around 960 near now. So when you are asking December 2023 Nifty target, that means Nifty will be trading around 960 of the EPS at that point in time. That means for 20,000 index, you require to trade at 20.8 time price earning ratio, right? So for 20,000 Nifty to happen in December 2023, the price earning multiple has to be 20.8. Is that a very difficult task? I don't think so. Our market in the last 6-7 years has continuously traded in the range of 18 to 24 times, right? Some COVID aberration here and there, ignore those. Largely, our valuation multiple in which Nifty has traded had been 18, very difficult task. I don't think 24 on the higher side, right? So in that context, 20,000 by December 2023 looks high probability case to my understanding. Largely our
Great. So another important point was about the fiscal deficit. So currently the fiscal deficit is 6.4% and the target for the next financial year, which is set by the finance minister, is 5.9%. So do you think that we are in the right momentum to achieve the target as a nation?
Yes, Smith, I would say, you know, the way the fiscal deficit has been set for next financial year and thereafter, they have given target till FY27 also, will come down to 4.5%.
We are in the right momentum to achieve
now deficit. If you look at in totality, I would say, you know, the quality of revenue, the way the fiscal deficit has been set, that has been, you know, if you look at the government budget is ultimately your profit loss statement, right? From where all they are earning money. Now deficit, where all they are spending money, right? Statement of revenue and expenditure. The quality of revenue. Now look at this financial year. That has been, you know, the amount of revenue that the government will get around 30 lakh kind of a crore number. And look at all the sources from where they are making it. At the same time, where they are spending it, right? I'll give you just simple one parameter to decipher. The revenue expenditure, X interest cost and subsidy, used to be 4 times of capital expenditure. From last 2-3 years back, the revenue expenditure X of deficit and subsidy was 4 times capital expenditure. Very large revenue expenditure. Today that ratio is only 2 times. That means the quality of revenue and the quality of last 2-3 years spending by the government has improved dramatically over last few years. So I'm pretty sure the kind of revenue expectation government had, these deficit will be surely met. I'm very quality of seeing that through. Spending by the government.
So another important point in the perspective of a common man is the tax regime that has been revised by the Honorable Finance Minister. So what is your view on that? Is that a right decision? And again, coming in the same question about the insurance sector, they have also raised taxations for the people paying premium of more than 5 lakhs. So how you relate these two things? Because they both go hand in hand, right? A common man saves money in the form of insurance, and then now there is again going to be income tax charged on the premiums.
Yeah. So let's tackle the tax part, the kind of reduced, and they have tried people to go to the newer regime of taxation, right? There are a lot of people who are saying there is a trade-off between spending and saving. Traditionally, we have been called better saver, right? And they have tried people to, so they have tried a lot of schemes so that we save more, correct? We are living in a new India. Look at post-COVID. majority of us Indians are using a smartphone. We have been using internet, we are all using mobile phone, right? Look at the digital and all your UPI, the payments that we are doing. New India means new Indians, and they have come to a point where they are matured enough to decide where to invest, right? He's reducing taxes or trying to make people shift to the newer tax regime without much of a incentivized investment for people, right? So this model is very applicable in India right now, because we have come to a point where we understand the nuances of investments. As an Indian, I'm talking about the broadly Indian. So this is step by the government where they are trying to make more money available in the hand of the normal population. And after that, they want to spend, they want to save, in which form they want to save. So removing all these incentive of skewing the processes that you put this much money in this particular investment, it's a good. I mean, we as an Indian are matured enough now. We want more of a money in our hand, and then we can judiciously decide, right? So this is a very great step to my mind, right? Now, coming to the insurance part, any business processes you try to simplify and make it transparent is always good. As a simple standard thesis, you have to keep things simple, easily understandable, right? And you should not allow regulatory or taxation arbitrage, what is called regulatory arbitrage or taxation arbitrage. So this 5 lakh rupee premium on the insurance on the one hand, which you spoke, maybe will create some of the problem for insurance company, no doubt about it, because a lot of people, it's not a very large percentage of total premium pie, but some percentage of the premium pie will surely shrink, because those were the investors who were coming to the market using a taxation arbitrage which was available earlier, right? So this is good. It's a simplification. It's removing those regulatory and taxation kind of arbitrage opportunity. It's structurally very good. In the short term, surely it will be a little bit negative for some of the people who were using those route per se. So that's my take on the subject.
So being from the investor perspective, should one be invested into the insurance companies that they have put money, or they should look on again diversifying their funds based on this?
Yeah. Very relevant. I think one thing is for sure, all of us investors who are investing into financial market or other markets, right? We need to be very, very sure the way structurally budget has evolved in India now. If you're using a tax loophole or taxation arbitrage or regulatory arbitrage to get a higher yield, gradually those opportunity will vanish in India, right? In the next few years, you will see things are much more simplified, and you can't use these loopholes from taxation to manage. This is the one thing. Specific to investors who are invested into insurance company, there are two important things I want to convey. If some of the premium that they were consuming, that they were collecting from the market will not come, it will impact their P&L, their profit loss statement. They will have lesser revenue, so they will have lesser profit after tax or lesser earning, right? There are various estimates. Few of the estimates I am very convinced with. Some in the tune from 5% to 13% will be the impact on the profit, right? But that will be one time, right? It will not be perpetual in nature. So one time there will be a earning per share reduction for many of the life insurance company. Some only 5% because they were not into those kind of product too much. And in some cases 13-14%. So that is the kind of damage on the P&L happening, right? So stock prices will fall, and they have already fallen by, because of this P&L reduction, the price impact has already come. Second parameter, every insurance company that you value for the longer run, you compute something called embedded value, right? It comes from the balance sheet and different scenario building with a long-term cash flow asset. These insurance companies are. If you look at the impact on embedded value, it's very small. It's very, very small. So from near-term earning point of view, there will be a downgrade, say take 10% as a downgrade in terms of earning. But in terms of balance sheet capacity on which actually the valuation multiple of a insurance company work, there the damage is not that large. So this fall which has happened is more of a compression of the valuation multiple, and already in terms of the multiple enterprise value to embedded value, EV to embedded value, or price to embedded value, insurance companies were not highly valued. They were moderately valued. Now with the correction, I think it's a very good opportunity. So if somebody is a really long-term investor, the current correction, because of some impact on the P&L of insurance company, the prices has fallen. But for long-term investors, it's a good opportunity to buy into. I'll surely encourage. If somebody was holding and this news has come, I think hold on to your investment. Don't get. This is not a structural, perpetual problem for insurance sector.
Okay. Thank you, sir. So another interesting area is about the cigarettes. The taxes imposed on the cigarettes, that too by 16%. So what will its effect be on companies like ITC or VSC Industries or maybe Godfrey Phillips? So because we are seeing high volatility in ITC also since the budget has come. So it's gone to 380 now. So
yeah, this volatility has happened because prior to the budget, normally these insurance company had a good run up. So January, February, they were running up. So they were going up in terms of the price structure, right? If you remember the prior market, because of the fear of tax going up, these company pre-budget used to be falling. Like for the 1 month prior, they had a falling kind of a pattern, right? This time it was a different. They were rallying before the budget. Why? Because for the last couple of budget, the taxes on cigarette were not raised. And this is very, very important. So this raise which has happened this time has happened after a couple of years, right? So it's not that damaging in terms of how things are. There was a run-up before the budget in these stocks. So that's why this volatility is there. Otherwise, it will be, think about it. Like if you are a long-term investor into a company like any tobacco company, I'm not naming specifically any company. What is the growth opportunity they have in the next 10, 20 years? Are the cigarette consumption or penetration of cigarette consumption is growing in India? I don't think so. Whatever data I have my hand on, the cigarette penetration in the last few years has shown a declining trend. That means at the max, the kind of growth this company will have will be basically from the pricing growth. The volume growth, I mean, amount of cigarette which is sold, the volume is not growing. It's a tepid 1-2% kind of a growth happening. So whatever revenue they are able to grow is basically whenever they raise the price. So pricing growth is happening, not the real volume growth. So I think if somebody is a very patient long-term investor, betting on a cigarette company is not a great idea. They are not the revenue, they create a lot of cash flow, right? But the revenue growth for these companies are not that high. So purely a cigarette company at a higher valuation, to my understanding, will not be great to recommend.
Great. So another point that I had in mind was about the tourism sector. So we also had our FM saying that they'll be looking largely to tap the tourism market as it has a high potential. So do you think that is going to affect the tourism sector in terms of revenues and volumes and its effect on the stock market?
Yes, Smith. Let's look at it in two particular aspects. One is tourism right now contributes almost like 13 lakh crore of, they generate that much of revenue every year. It's about 6% of your GDP. So the contribution to our GDP is 6%, near around 6%, right? But more than that, they generate a lot of employment, right? Almost 32 million jobs are there in tourism in India. A lot of semi-formal jobs are there in so a sector which is not a big revenue generator per se, but huge amount of the delta on employment generation as a proportion to the revenue that they generate is very, very high. So it's a very right time for the government to have an initiative like the one that on the tourism, because the delta or the impact of it in a medium to long term on the employment generation will be very, very high. So that's one part of it. It's a very good initiative. The second part is like, encouraging a lot of domestic tourism. Our per capita income is growing now. So you will see a lot of Indians have a tendency of going to international places to move. I mean, say 20 years back, it was not very common for somebody to have a international travel, barring few top 1% of the population of India. But now even the middle class aspire to have a couple of foreign this thing. If they get a similar kind of a feel and experience available in India, they will do a lot of domestic travel. So secondly, it helps you in protecting a lot of foreign currency expenses, right? Which is very vital. Not only these two, by having good amount of experienced places for tourism inside India, you are making Indian to move around a lot. And as will move around a lot. They'll be spending a little higher than what they spend right now. So it's a very structural thing. It creates a lot of employment, helps you in forex stuff, and makes this, in terms of the spending habit of India, and you are making a qualitative change in the structure. So it's a good initiative. I mean, these are the initiatives which are foundational for a long-term new India.
So thank you so much, sir, for the valuable insight. Now, I have been your follower since a long time, and what I've understood is you follow the growth in value strategy for investing in anything. So what will be your top picks for new investors or the millennials who are now coming into the market? So where should they invest basically, or where should they look forward to invest in based on the model that you follow basically?
So I'll give you one general for every investor, let's look at the Indian budget and compare it with when you do analysis of a company. You do analysis of a company to invest into those companies. You read the annual report, you look at the balance sheet, look at the cash flow, right? And just correlate the two things. Now, when you look at Indian budget, you are very convinced of whatever number they declare. Many of the audience who will be listening this particular podcast, they will be knowing that, say, 5 years back, 10 years back, 15 years back, we always used to have doubt on budget numbers. Now, none of the Indian analysts or international analysts have any doubt on whatever the reported number of India is. Right. That means when you look at the numbers in terms of forensic audit, which is the initial thing you do while investing into a company, you see the numbers are credible or not. Indian numbers look highly credible. At the same time, as I said in a prior question also, the quality of revenue and the quality of expenditure, so the P&L statement, the profit loss statement of a country, has seen dramatic improvement, right? At the same time, transparency, simplification are happening. So continuously you are making your balance sheet stronger, your long-term earning capability is stronger, right? More importantly, what I have noticed in this budget and the last budget also, this government is now promising less, delivering more. So this also is a particular thing of under promise, and I'm sure it will be over delivery next financial year. Yes. Now correlate this with a company analysis. Whenever you do a forensic audit of a company annual report and you feel numbers are good, it's an investable company for me. You look at the P&L, the cash flow, the quality of earning, how well and how good is this. You look at the balance sheet, is it strong or not? You look at the whole business strategy. Are they simple enough? Are they straight enough? Will that be scalable? So what you call those companies? Those companies are called consistent compounder. They are called quality company. The share price of those companies keep growing for many, many years, decades to come, right? What my belief is today, India's balance sheet and the P&L as a country, as an economy, is such a shape where I can safely say India is a multi-bagger economy. India is a consistent compounder economy, the way I'm looking at the numbers right now and the future at the moment. So one, you must invest in India. There is a huge opportunity for this economy to grow very, very big, right? After good amount of growth, it will not be growing at that faster rate. Wealth creation will not have that strong an opportunity. But today where we are, both the rate of growth at which economy will be growing and simultaneously impact on the stock market will be very, very high. So first thing is every investor must have good allocation to Indian equity. That's a very, very important, right? My equity or anyone else's portfolio. But what my belief is, you must be invested sufficiently enough in India's equity market right now. You have a great decade ahead for you, right? Coming to our own philosophy and the kind of things we are liking. So we stay very simple. Our philosophy is we don't buy anything which is not quality. We start with a quality company. We look at among the quality where the growth is going to happen. And then in the end, we look at the valuation, whether I have a good reward to risk opportunity or not. So naturally, budget or no budget, my thesis will remain buying only quality company. For growth, naturally, you look at the budget. So from this budget, the sector which is have a good delta for growth, one would be banking, and second will be infrastructure.
Okay.
So the quality company of banking sector per se, and the quality company of infra is the one where growth characteristic will happen. So for me as my portfolio manager, whichever quality company we like already in banks and infra, where the growth is getting ticked now, will be the one on radar.
So as you told, sir, quality stocks or quality sectors should be focused. One concern which I had in mind is the Adani Group right now. So data says that around 15 to 18% holding of Adani Group is with the retail investors. So in a situation which has been creating in the last few days or a week's time, what is your message to the investors, whether they should hold on with the company or they should just withdraw or book losses? What is your opinion on that?
See, I don't own any Adani company as a disclosure, first of all. As an analyst, naturally, we keep looking at various companies which is listed in India, and Adani was a large group. So we actually sometime we had seen, but we never owned any company per se. Couple of things, there are two parts. First is about the group. If the group's company valuation was very high, and this is a valuation correction, that's issue number one. Secondly, is there something to do with the solvency of the group altogether or any particular company of the group in question? We don't know. I don't have any access to those information. I can't comment upon that, right? Valuation correction is happening for sure. Look at their EV/EBITDA or the price earning multiple, say a month back and where it is now. Naturally, valuation correction is happening. If it is a mere valuation correction and there is no solvency issue, and I'm not commenting upon those issues because I'm not privy to any of those information. Prior experience in the market tells me, in a one market, whatever the leader is, they take a lot of time before they come back in the market to become a leader again. It takes time, right? So people who are holding, if it's a smaller part of your portfolio, fine, you can stay with the tide for good many years, but don't expect anything miraculous to my understanding in an immediate sense. If you're holding a very large percentage, naturally you did a mistake in the first go itself. You should have a diversified portfolio all the time. If you had not done in that right thing in the past, do it now. There's never a wrong time to take a right action. So this is how I look at the whole story.
So thank you so much, sir. It was a great time having you, and it is our honor that you have given us second year consecutive for the budget overview. Last year also you were there with us. So from the entire InVenture family, I would like to thank you. And that is it from our end. Anything else that you would like to add for the audience? It would be
as I said, one thing is very sure. Look at not this budget, last 3-4 consecutive budget. Transparency of the budget, quality of the revenue and the expenditure of the government continuously has improved, right? Structurally, things are set in a very right direction. So my thing, don't worry about the short-term scenario. FI is selling, sometime a group being in problem, something else will happen because market will have those liquidity swings, right? Market keeps swinging. But structurally, in a linear sense, this market has given decent double-digit return over the last 3 years, 10 years, 20 years. And today, the way things are structured, there is no reason why in the next 3 years, 10 years, 20 years, you will get anything less than that. So from investing standpoint of view, ignoring the short-term swings of the market, if you are underexposed to Indian equity, please raise your exposure to Indian equity. That's one thing. 3-5 years down the line, you will be very happy with.
Thank you so much, sir. And it was a pleasure having you with us on the discussion. Have a great day, sir, and looking forward to get in touch with you again.
Sure. Thank you, Smith.
Thank you.